Good morning and welcome to Beyond the SEAF model. I'm Jack Kosar. This is effective for April 15th, 2024. Let's get started. Our signals for this week are energy, technology, and industrials. We are keeping our industrials and energy from previous weeks and switching out communication services for technology. Technology came in really strong here with a weekly trading of one. That is about a 0.48% increase in terms of its net asset flows for the trading week, which kind of propelled it back into the top three, along with its legacy strategic quarter of two. Um, it appears managers got enough of their couple week break from technology and have raced money back in. Energy remains strong in a trading position of two on the trading week and an overall ranking of four, with a net increase of 0.29% in the asset flows for the trading week. These two flows are relatively strong. On the flip side, healthcare showing some continued weakness as we are in the dreaded 33 ranking or 11s across the board, with a relatively strong outflow leaving healthcare. Um, Consumer staples not doing too terribly much better, with 10s on the both tactical and trading week, with a 9 in the strategic quarter. We are seeing a little bit of life out of consumer discretionary. Now, note this was a relatively at 3 was a relatively light on the trading week, and but we are building enough little bit momentum that we are now into the uh, favored ranking. As you can, we'll show a little bit later on the chart. This really hasn't materialized into any relative outperformance quite yet, as it being relatively weak. But we'd like to see these things trending in the right direction. Also, seeing materials kind of in that same, 7 to 3 to 4, uh, sitting in the upper favored rankings, but nothing yet in terms of relative outperformance. Heading into our heat map, we have a little bit of that clumping that I like to see. Energy staying strong, technology showing some strength here. Otherwise, though, on the trading week, relatively weak outside of the negative flow in healthcare. Picks really for this week being technology and energy. Markets in a little bit of a transitionary period. But the conviction in these two was nice and strong, so that was good to see, as well as a little bit of the clumping of the green in this upper projectile. As I mentioned, consumer discretionary coming in third for the week, but still relatively weak and showing neutral movement over the last tactical month in strategic quarter. So, again, nothing to do yet there. We'll see it on the chart, but just something interesting to note. Uh, First, but particularly least, is our healthcare. Healthcare is at the deep avoid, all the way 33 ranking, showing at continuation of a downtrend in the relative outperformance versus SPY. Uh, we saw this little bit of sideways momentum here in terms of trying to pick up something, and it just kind of failed back into its into a void ranking. Healthcare just continues to struggle. So we will, keep an eye on this space. Obviously, at some point you got to think prices become, attractive to some managers, but we are not in that position yet. Money flowing aggressively out of healthcare. Consumer discretionary, yeah, this is what I wanted to highlight. We broke in, we were sitting at this avoid, a little bit of a broader downtrend in the relative outperformance over the last couple of months, breaking into favored, but not seeing it in the relative outperformance. I have a feeling this has to do with the weakness of that flow. We are bringing, like I said, favored territory. We're top three with some decent trailing in the strategic and the tactical, but overall, haven't seen anything yet that would move the needle in terms of relative outperformance. We will need to see some continued favor as we've seen in the previous periods in order to get that upward trend. So this is more consumer discretionary, is a place to watch. We are not seeing it move on the chart yet. So obviously, if not a void is favored, but it is not a SEAF signal, as we aren't really seeing that strength of flows coming into the consumer discretionary yet for us to even maybe try to take a lead off. Next, industrials. Industrials weakened a little bit on the trading week, seeing it as a actual slight net outflow, but effectively zero or no change in terms of money flowing into industrials. As you can see here, I drew in this trend line. We are testing the relative performance trend line, but overall, industrials still favored. Just a place to watch though. If this breaks down and we start to see us kind of middling down into this neutral territory, neutral ranking, that's when we'll start to see some weakness in industrials. But like I said, weakening on the trading week, still relatively strong from the tactical month and the strategic quarter. So industrials is a C signal for this week. Moving into technology, technology kind of came out of nowhere and shot up into the favored ranking. This is you can see here showing positive relative outperformance after a slight little slide. As we're seeing, very strong flows into technology this week and catapulting itself back into a SEAF signal. And just we're gonna have to keep an eye. Technology is moving a little bit faster as money kind of flows in and out. So ideally we pick up some trend like we did toward the beginning of the year. But this is going to be a wait and see how technology does. If we can continue to see those flows, technology has been good to us over this past couple of months. So we got to follow the model here. Money is flowing aggressively into technology. Energy. Wanted to spend a little bit of time in this chart with energy. It looks a lot simpler than you would say when you're looking at consumer discretionary or when you're looking compared to industrials or even compared to technology. We got a lot. These trends are a lot longer and a lot more stable than we see in some of the other sectors here. As you can see, during July to about the beginning of November last year, had this nice relative outperformance trend in energy, and we really kind of stuck up there. It was very slow, very methodical, and it really stuck in that favored ranking, and that really produced some relative outperformance. We are seeing a similar trend right now. We are, hanging up here in this upper favored. We're seeing a nice steady increase in relative outperformance versus SPY. And as you see, when this thing goes to void, the relative outperformance is key in terms of it being negative. We have a similar spot early part of second quarter last year. Relative outperform, SEAF was telling you this was a void, and that was directly correlated to negative outperformance versus SPY. As we turned the corner and we stayed up in this favored ranking, we got our positive relative performance. We're seeing that again. Energy continues to be strong. It's overall four ranking through three time periods, and top two on the weekly chart. Still showing relative strength in terms of flows. So energy, a great space to be in right now. Last, but secondly, least, consumer staples broadly just struggling over the course of a long time period here. We are seeing this really long, pronounced underperformance trend versus SPY, and not too much to say here, but other than SEAF is telling you this is a void. We keep making these little spurts of attempting to get into favor that show um, attempts at correcting the downtrend in relative outperformance, but broadly staying in this avoid or void ranking. Pretty pretty strong outflows, not quite to the level of healthcare, but on the same path. Consumer staples continues to be in a void. That is all I have for this week. I hope everybody has a wonderful week, and I look forward to breaking down the SEAF model with you next week. Thank you.